index market. So I want to basically give us a rundown analysis on our buyers for today, market. So currently, what we can see that the market has been on a downward trend. So we can see the market has been on a downward trend. Now, before that, this is just a level of a high and a low I plotted out here on the higher time frame, just to give us a long time bias basically. So if we look at it, we have that high, that's what I did, and then I plotted this point, which is our low. Now, having done that, one other thing again I can see clearly is we have a resistance point around here, which also constituted this break. We also had market testing that level twice. So that is this area. So you can see it clearly. If I should zoom out. So this is actually, you can see market pushed out, broke this level, came back to test it, pushed again, came back to test it, and then began to give us our push to the upside. Now, that having happened, we're currently at this area here where we have market pushed up and then it's currently consolidating around this point. So for us to know what we would be anticipating to take as our bias on this area, if we should look at market, this is actually one of the major break of structure we have also, just as this is the break of structure we have to the upside. So this is actually one of the major break of structure we had to the downside. So we can simply mark that area, and then we have market laying around here. One other thing we can do to assist the whole bias thing is we can come here and then draw our trend line. Now we always draw our trend line from the lowest point to the highest point. Now we can simply just draw it from this low that created the break of structure to the top. So this is what we have. This is what we have, guys. Now, this being the case, it's trying to tell us that it has given us a break of trend line to the downside. That's what market is trying to tell us at this point, that we have a break of trend line to the downside. So what do? We are still on an uptrend. So we have not really confirmed if this is actually going to be a continuation to the downside. So basically, we'd simply go to the smaller time frame. Now, on the smaller time frame, what do we have? We can clearly see market has broken this area here, and then we can also clearly see that on the smaller time frame, market has broken what we'll call structure at this area. So market has broken structure at this area. We had this was our last break of structure, and then this low actually created a push up to this area, hitting take profit, and then market dropped to the downside, retraced, and dropped again to the downside. So ideally, what I'll be doing is I will be considering this as a zone would actually be using for a sell. A zone would actually be using for a sell because one, we've gotten a break of trend line, which is a significant thing in the market. We've gotten a break of trend line. We've gotten a break of structure at this point to the downside, telling us that market is weak. It hasn't created any higher low. It hasn't created any higher high from this area. So what it created was a lower high. Okay, so let me show you what I'm saying, guys. starting from here, starting from this low, we gave us a high, down, created another high, give us a low, it gave us another high, created a lower high, a higher high, and so on. We had it this way, it did it again, and then we had it to the upside. Now at this area, we'll find out that market did not create a higher high, and then what did it do? It simply created a low. You understand? It created a low, and then this low is actually tending to create, it has actually broken structure at this point, so it's tending to create some kind of information for us to use. So what can we simply do at this point? What we can simply do here is, one, we can mark our break of structure. So this is our break of structure. We have a break of structure here. And then another thing again we can clearly look at or closely look at is what we'll call our liquidity grab, or some persons will call it liquidity swipe. So we can see our liquidity grab here. So having seen our liquidity grab at this point, we can now go to the smaller time frame, which is the 1 hour time frame. Now the 1 hour time frame, we can come here and then we can clearly see that on this 1 hour time frame, market actually broke structure here, telling us that, giving us our bias to the downside. It broke structure here to the downside. Then it came here, took out liquidity. You understand? So I think, okay, it first of all took out liquidity, then came here, broke structure, and is currently reversing. So now, what can we simply pick out from this particular market? We can simply pick out this area as our area, which we'll call our point A. This is basically our point A, and this is our point B. So using our Fibonacci tool, you can see it here. This is our point A and point B. So this is our point B, this is our point A. So all we can simply do is we pick our Fibonacci tool, and then we drag it across. Now, having dragged it across, what can we clearly see? What we can clearly see on this market is this. We got markets reversing from the 0.618 level, which is this area. Market actually got into that area previously, but before the structure was created. And then we have markets clearly tapping into our 0.618 level, dropping to the downside. So what can we simply do from this one? We can just simply go to the smaller time frame, and let's see, which is the 15 minutes time frame. That is the last time frame we can look at. Okay, good. So on the 15 minutes time frame, what can we see? What can we see? Okay, then that's not really the point. Not really the point. Ideally, I am actually seeing a signal here. What we're supposed to do is to take our sell the moment market got into this price, place our stop loss here, and then we place our take profit at this point. So that is that for this particular trade. Then for a re-entry, if we get stopped out, is this particular area. We place our stop loss at this point, and then we place our take profits at this point. So if you are joining and watching this video on time, you would actually be able to benefit from this particular trade. You would actually be able to benefit from this particular trade. So this is what we have. If you can see on the 1 hour time frame, you can clearly see we have a candlestick confirmation, which is at this point. At this point, we have a candlestick confirmation on 1 hour time frame. That is what we call our bearish engulfing candlestick. So if you can look at it clearly, you can see our bearish engulfing candlestick. So when market tapped into this price 0.618 level, the bearish engulfing candlestick came out to play, and then we can clearly see market reacting towards it at that area. So anticipation is here. The risk to reward is 1:3.67, and then on the other trade, our risk to reward is 1:3.5. 1:3.65. So those are what we are basically targeting and looking out for on this particular market. Only thing here is you can actually take your trade, calculate your risks between this area and this area, put your stop loss at this point, and that is it. That is actually what I'm going to be doing. Alright guys, peace. This is actually an update for today. Please do well to subscribe to my channel, click the notification bell icon to help you get notified as I drop any new video. Peace guys.